One of the best parts about buying real estate is that you don't need gobs of cash to get started. In fact, I would argue that your creativity, your determination are more important factors than your savings account balance. All you need to do to get started is to secure a down payment on your first rental property and let the bank finance the rest. Think about this for a minute. There's no other asset type that you can buy with the bank's money to grow your net worth and begin creating passive income. I mean, try to do that with buying gold or try to do that with buying silver. It's not going to happen. The bank's not going to lend you money to go and do that. So today I'm going to help you brainstorm a few ways to fund a down payment on your next rental property. If you're ready, let's get into it. Number one, take a loan from your 401k. Now, don't be scared. The money inside your 401k is yours. There's nothing wrong with utilizing it to make a smart investment like buying a tangible asset. Now, remember, I said loan, not a withdrawal. This is a loan. You can do it all day long as much as you want. Here's a few things to take into account when it comes to taking a 401k loan. Most providers will allow you to take either 50% of your savings or up to $50,000, right? That's the max they're usually allowing. Like in our company, Morris Invest, most of our build-to-own rental properties are going to have a down payment of about $50,000. So it's a perfect number to get started. And then what happens is you'll pay back the loan directly from your paycheck, including the interest. Did you hear that? You're paying it back, including the interest. So you're borrowing it from yourself. So it's like your own bank. And then you're paying back yourself with interest. Isn't this the greatest thing ever? I mean, you're making interest off of your own money on a loan you gave to yourself. Most people don't even know you can do it. Unlike a 401k withdrawal, there aren't any taxes and fees involved with a 401k loan. Again, it's your money that you're borrowing from yourself. And it's usually very easy to do. When I did my first transaction like this years ago, was how I was able to start investing in real estate pretty heavily. I went to Fidelity's website, was able to go right there, and within like 3 clicks, it was so stinking easy. I was able to transfer $50,000 right over, and boom, I was able to make my first investments. This is not for you, though. I should say, if your employment isn't secure, like if you're about to leave your job, right? Don't take a 401k loan and then try to leave your job right away, because you're going to have to pay back the loan before you can do all that. Just don't do that, okay? Just stay away from that. And then you can structure the payback over a certain time. So I set mine to 12 months, and it would come out of every paycheck. It would go right back into the 401k plan until that loan was paid off, and then you can do it again. Number 2, tap into your home equity. Most homeowners are richer in equity than ever. So why not put that equity to use and buy a performing asset right now? Here's what you need to know about using a home equity line of credit as a down payment on a rental property. Generally speaking, you'll have to have a credit score above 620 and at least 15 to 20% of your mortgage paid off. You may be able to borrow up to 80 to 85% of your available equity. And the best way to get started is by shopping the rates around at your local banks and your local credit unions. Number 3, save your money faster by investing in real estate notes. This is one of the best ways to save up for a down payment fast. And this is my top recommendation for anyone who's new to investing and wants to see their returns grow. Here's what you need to know. You can start investing with as little as $500. Returns are going to be in the 7.5 to 9% range, which is more than double the going rate of a savings account or a CD. As a beginner, the lowest barrier to entry is by working with a reputable company. We like our friends at Connect Invest. In fact, we've partnered with them. You can go to our website at morrisinvest.com/connect. If you invest at least $500 using my link, you'll actually receive $50 just for joining. They'll give you $50 if you use our link. We'll have it in the description box below. Again, morrisinvest.com/connect. Now, $500, you can start investing in real estate notes. So even if you don't have enough money for a big down payment on a main property yet, you can start to squirrel away some money and make some great returns between 7.5 and 9% returns right now. You get to pick the note. You get to pick the length of time. You want to just invest for 6 months, 24 months, totally up to you. And then once you start seeing returns, you can actually reinvest that money to quickly save up for a down payment on a rental property, compounding your profits. We'll get back to that video in a minute, but first, I need to tell you about a golden opportunity for investors that's happening right now. Mortgage rates have plummeted in anticipation of the Federal Reserve cutting interest rates at their upcoming meeting in September. Now, it's good news for buyers, and it has presented a unique overlap in the investing world right now. Remember, when mortgage rates spiked last year, well, a lot of sellers started offering incentives to help investors achieve positive cash flow. For example, my company, Morris Invest, and our our team over at Sedera Wealth started offering clients a rate buy-down credit. Now, a rate buy-down drastically reduces your mortgage payment. And if you've ever run the numbers on an investment property, you know that's a big deal. Now, here's where the golden opportunity comes in. When mortgage rates change, it can take a while for other things like seller incentives to start catching up. So even though you can get a mortgage rate in the low 6s right now, and that could be even lower by the time you're seeing this video, right now you can also lock in a rate buy-down credit on top of that. And this is huge, people, huge. With the two combined, our team's finance expert said he's seeing our clients locking in rates he hasn't seen in years. But here's the catch. The window of opportunity here is very narrow. This overlap will close very soon. So those seller incentives are going to fall off very, very soon. There are two more reasons to move quickly on this. One, prices are rising week over week. And now that rates are going down, they're going to spike even more dramatically, which will be made worse by two, increasing competition. Potential buyers have been sitting on the sidelines just waiting for rates to drop. And now that they have, they're going to flood the market, reproduce bidding wars, pushing prices even higher. If you need a refresher on the advantages of owning real estate, like how it delivers 4 streams of income through number 1, appreciation and equity gains, number 2, principal reduction by your tenants, number 3, tax benefits and depreciation, and number 4, cash flow, I'll link another video in the description so you can check that out. But if you've done your research and you already understand why build-to-rent properties in high-growth rental markets are a great path to financial freedom, then take action right now. You do not want to miss out on this opportunity to fast-track your investing strategy. Cash in on this narrow overlap of lower rates and seller incentives while it's here. Click the link below and schedule a free call right now. It could be the most important call you make this year. Number 4, consider using loan types with smaller down payments. Instead of working to save up 20% for a down payment, look into different loan products that may actually allow you to contribute less upfront. The major drawback here, of course, is that most, if not all, of these loans have a minimum occupancy requirement of about a year. But if you're in a position to do this, here are a good few ideas for you. An FHA loan for first-time homebuyers only requires a minimum of 3.5% down. So maybe you find a duplex, or maybe you find a single family, and you know that you want to eventually use it as an investment property, but would it kill you to live in that property for 1 year to meet FHA guidelines? And then you're only putting 3.5% down. Now you own that property, and who's to say you want to move? You move, right? VA loans, the same thing, which are specifically designed for veterans or active duty service members. They don't have a minimum down payment at all, right? Now, certain multifamily loans may allow you to put down as little as 5%. So you need to shop around and see what's right for you. Number 5, split it up with a partner. Start a real estate business with a friend or another investor. Yeah, just create an LLC and you guys go in together, or a couple of people, right? And you divide it up. The great thing about working with a partner is that you can actually pool your resources. It also tends to make it easier to get financing. Consider working in a partnership program like we offer at our company, Morris Invest. We can actually provide you with additional shortcuts. We can help you find a property, and we can offer you a full-service approach that makes the entire process easy. So to learn more, schedule a free call on my website. Just go to morrisinvest.com, and we'd love to talk with you. Now, make sure you sit down with an attorney to set up the correct entity type, though, and make sure you're both protected if you guys are coming together in a partnership like that. Anyway, I hope this video gave you some ideas, ways to access those down payment monies a little faster. Remember, there's not a one-size-fits-all approach to real estate investing. So feel free to combine some of these ideas, use some stuff from a 401k loan, use an IRA that's been sitting there, partner up with someone. All of these things can come together to help you get started with real estate investing. If you are hungry for more information on how to build wealth through real estate investing, our whole channel has tons of great resources for you. But I'd love for you to check out this next video. It's the best ways to buy real estate in 2024. We'll see you next time, everyone.